Good morning, everybody. Welcome to the game plan. My name is Gareth Soloway, 25-year pro trader, and I'm here to give you the insights into the trading day so you can make some money. All right, so first and foremost, what we have to talk about is the Federal Reserve. Don't forget, this is going to make markets wild. Right now, markets are favoring a 50 basis point rate cut. We are seeing markets moving higher today on anticipation. It's almost like my kids just before I give them a lollipop. They're so excited for that thing. We'll see if there's a hangover, if there's a downside to all that sugar afterwards. All right, let's get into the markets right away here, folks. S&P 500 pre-market is moving higher. Take a look at this, guys. So this is 4 in the morning right here. You can see the market's chopping sideways. We did come up here. Notice this trend line on the 10-minute chart. So we're on the 10-minute chart here. Look at that trend line getting tagged, reversing. That's when retail sales came out this morning stronger than expected. So again, not much of an impact there, but it's one thing that may say, all right, will the Fed continue to cut rates aggressively if we still see a consumer that's strong and if the other economic factors remain strong as well? But this trend line, I want to show you this, guys. Let's flip over to the daily chart and take a look here. This trend line marks the all-time high on the S&P 500. So very clearly, there's your previous pivot top, and pre-market, if again, this is the daily, so it's not showing the action pre-market, but right here is where we're trading, right into that level at a double top on the S&P 500. Now, remember, if you've been following, if you're a daily watcher, number one, congratulations. Thank you so much. I really appreciate it. Number two, remember that in 2007, the markets did exactly this. They made a new all-time high on the S&P 500 for about 3 to 5 trading days before the bigger down move in 08, 09 took place. So just keep that in your back pocket. Be more alert. And I want to tell you guys something so important. The institutions out there, they're lurking. They're trying to get everyone in this market. This is why markets make new all-time highs before big collapses, because they want to get all the retail money in. By doing that, they're getting you in, and you become the bag holder when it falls. And you know when most people get out of the markets? When the markets go so low that the pain is unbearable, a la 09, in early 09, that collapse happened. A lot of people lost their retirement. They had to go back to work, and they actually ended up throwing in the towel just at the lows. You know who was buying down there? Institutions. Just putting all those shares in their pockets, accumulating. So this is the stuff that I walk you through, the institutional know-how, the institutional tactics and secrets. That's what I'm dedicating my life here at Verified Investing to, making sure you guys at least have a little bit of an edge understanding the games that are played. All right. Let's go to another chart here. This is an amazing chart. I've shown this once before, but I got to show it again. This is the Dow Jones Industrial Average chart going back to 1897. 1897 all the way back here. Here's your high pivot. All right, I don't even know if you guys can see this all the way over here. This is from 1897 right here all the way to current times over there. Notice the 1897 high. This is the high just before the stock market crash and the Great Depression. Goes right through your 1999 dot-com high, and look at what we're butting up to. Here's your 2021 high right here, and here's your 2024 high on the Dow. Now, I am using a logarithmic chart, so if you want to replicate this at home and show your buddies, more than happy to let you guys do that. Go for it. Make yourselves look like you're really cool, because I love, at least for me, this is cool stuff. But in any case, this again is a major resistance point that I'm following like a hawk, based on the fact that you had such major collapses. Dot-com collapse right there. The Great Depression right there, right? I mean, major hits of this trend line ultimately resulted in big moves to the downside. So again, remember, what I talk about in these game plans, it doesn't necessarily guarantee it's going to come, but I'm one of those people, and I know you guys are. If you're tuning into this, you're the same way as me. You want to know what could happen. What's a possibility? Because there's a lot of people out there in this world that just want to put their head in the sand, and then they want to forget about it and say, hey, listen, if I don't know about it, it doesn't matter to me, I'll just go about it. And those are the people that get burned in bad situations. I'd much rather know every situation that's a possibility and at least allocate, distribute, have a portfolio that protects me in any scenarios. It's why I have solar on my roof, because I have battery backups. I can run off the grid if I need to. It's why I had a deep well drilled on my property so I have water if something were to happen in those situations. It's why I have fruit trees in my yard and a garden, is to be prepared just in case anything happens. Hopefully, none of that ever matters. Hopefully, I spent that money and it's not a big deal. Granted, I'm getting paid back by not having an electric bill, but still, the idea is to be prepared for anything that comes. All right. So let's get into some other things right here, folks. What I want to show you, we're going to go to the Fed Watch tool on our website. And really, honestly, I'm checking this Fed Watch tool like 3-4 times a day now because it's that important going into the Fed meeting. So if we come down right here and we click on the Fed Watch tool, we can look at what the probabilities are going into tomorrow's meeting. All right, what I'm going to do here is I'm going to change my line to being a black line so that we can see it on the white background. But right now, it's a 67% chance of a 50 basis point cut. All right, there's a 33% chance of just a 25% cut, or a 25 basis point cut, excuse me. The key is this is the most likely outcome. And remember, everything we do here at Verified Investing is probability based, just giving you the flat out odds. You guys make up your mind. If you want to go with probabilities, that's how I do it. That's how we make money here, by trading based off probabilities. But that again is telling us that the Fed is most likely going to be cutting tomorrow by 50 basis points. Okay, the other kicker is, don't forget, I'm going live at 2 p.m. right here for that Fed announcement and the press conference after. I'll be even looking to take some trading opportunities real time if we get those trading opportunities in the charts. All right. Let's keep going here, folks. So a couple other things to go over here. Let's flip back to our website here. I just like to tune into the crypto heat map here. At the end of the day, I always go over the heat maps as well, but you can see that we are seeing a bounce in Bitcoin. And by the way, these heat maps are on verifiedinvesting.com as well. Really trying to just keep adding quality information for you guys. But again, Bitcoin, Ethereum, Binance, Solana, all green on the day. But remember, we've had 3 down days in a row on a lot of these cryptos. So they're just getting a little bit of a bounce, but they're bouncing up with the stock market pre-market. Okay, let's get back into some chart action. There are some movers and shakers today. One of the movers this morning is Intel. Intel is having a big move, although it is coming in a little bit here pre-market. Take a look. The company today, or I should say yesterday after hours, announced a deal with AWS to develop a chip, a special chip just for Amazon and AWS, and the stock ripped higher, went a lot of sideways in the overnight and into this morning. It is pulling back just a little bit. Now for me, do I care that it made this move? Couldn't care less. What do I care about? I care about the resistance and support levels, because that's where a trader will thrive. All right, so what do? Well, we flip over to the daily chart and we take a look. Well, again, yesterday, Intel was up on a $3.5 billion grant from the U.S. government. Today, it's up on this AWS news. If we look at the resistance line right here, it's very, very clear that there is a level, but it's not until $24.75 to $25. Where does this line come from? Zoom out, and you can see very clearly where I came up with this line. So if we look at this, right, you have a major pivot low going back to 2022 right here, okay? And if we look at that again, we draw that in. Here we go, there, and stretch that line out. If price rallies up into that level, that will be a day tradable level. Now, would I swing trade short this? Would I buy it here? No. I don't buy stocks that have rallied 10, 15% in 2 days. I just don't do it. It's a cardinal sin in investing. I never chase. You chase, that's the people that buying Bitcoin at 69,000 before it went to 15,000. All right, but what do? Is I start looking at resistance levels. This would be a day trade level right here. This gap fill up here around 29 would be a swing trade short level. Now, if it pulls back, potentially a buyable level down at double bottom down there. So there's always opportunities, but you isolate down the levels in the charts, and then you wait, and you stay disciplined. Disciplined traders make money. Undisciplined traders lose money. It's just that simple. All right. Let's go on to the next chart here as we go through. Microsoft is rallying this morning a little bit to the upside. You can see right here, it is trading up. Let's see here. Where's it trading? Right around just below 440. So you can see, again, it's been trending up. The stock was stuck kind of underperforming recently. Well, guess what? The company comes out and says, hey, we're going to hike our dividend. We're going to do a buyback. It's a classic. When stocks start to struggle, what's the easiest way to get things moving? Do a buyback. Let's just buy back some shares. Because remember, when you buy back, and by the way, this is one of those games that institutions and stock companies or public companies play. When you buy back stock, you decrease the amount of shares that are in the company. Therefore, even if you make the same amount of money, your earnings per share go up. Think about that. I'll go into that in some video at some point to explain it more. But again, it's essentially artificial financial engineering at its best. Not to say that companies shouldn't do it, but again, just understand it is what it is. In any case, we're seeing Microsoft up today on the charts here. If we go to your daily, look at this. We have a parallel channel right here. And I find this fascinating because here's your parallel channel, right? You have your lines here, here, and here, and here, all the way through, right through here. Right here, we kissed it, got rejected. Now, today we're going to open up right around that line, right around 440, and I'm very curious if it gets rejected again. Now, technically speaking, what type of pattern is this? Well, it's a bear flag. So even though they're announcing good news, all right, for the stock, even with the move up now, which is only about 1.5 to 2%, but again, for Microsoft, that's a pretty big move. But notice what's the pattern here? Down move, here's your down move. And then look at the sideways chop, right? What type of pattern is that? Right? What ends up happening probability-wise? Eventually it leads to another leg down. So this is bearish consolidation, even with today's move up, coming up under the underbelly of a parallel channel that it had broken down. I would actually be inclined to short this move at 440 or just above and look for a bigger swing trade to the downside. Not day trade, mind you. This would be a swing trade. This is a daily chart with a bigger pattern formation. It would be likely a good shortable level on Microsoft. All right, so those are the two stocks that are moving today. We do have Teladoc. Ben, one of my head traders here, was pointing this out yesterday to members, showing this trend line. By the way, this stock used to be a $300 stock like in 2021. Incredible. But look at these, all these hits on this trend line, really the tightness of this down move. And then look, it just broke out here. Now, again, it's already up like 10% today, so don't chase it. At least I wouldn't recommend chasing it. You can see here on the 10-minute chart, it's already trading up pretty nicely. But it just shows you that charting can give you ideas. It can give you high probability scenarios where you can make very good money. All right, next up, let's get right into Bitcoin here, guys, and we're going to go into Bitcoin's action and cover a few things here. Bitcoin on the daily chart, let's bring that up. There we go. So we talked about Bitcoin when I looked at the heat map of being higher on the day. You can see your bullish bearish pivot line. You came right up underneath that. You backed off 3 days. Now you're getting a bounce. Tomorrow's Fed decision is going to be huge, not only for the stock market, but for crypto, for gold, the dollar, the 10-year yield. All of these will be major of major importance or big movers off of this Fed decision. In fact, I would say this is the first Fed decision. Number one, it's the first cut of this new cycle that we're in. But it's also a question mark of 50 to 25. Right? So it's not just, oh, they're going to cut by X amount. It's everyone knows it, right? Where a lot of times when they weren't raising rates, we all knew they weren't going to raise rates. This is a little different. This offers a new chance for volatility in the markets, which for me means opportunity. Remember, volatility equals opportunity if you know how to read the charts. So we're going to watch very closely the pivot line. If it flushes, I have major support right down here around 52,800. But again, let's watch our crypto charts here as we get into the action. Before I continue into gold, just wanted to show you guys one real quick thing. I've talked about this before, but this is the back end. This is the member side of advanced trader analysis. This is what I was talking about last week, guys, and I've talked about this with you guys. $20 price point. You get literally a trade a day. On the weekends, I give out 3 trades for the coming week. You get daily market reports, all this good stuff within this for 20 bucks. And I just want to show you guys last week's trades that I gave out on the weekend. So I scroll down on this amazing feed here, and here we have Gareth's three top trades for the coming week. But look at this. Last week, this was not this Sunday, but last Sunday, these were my trades right here. Oh, I got to pop it up again here. Bear with me if we bring it up. And these were the ones that I isolated down for members. I don't know if you guys can see it, but it was Celsius, JKS, and 𝗟𝘂𝘅𝗔𝗹𝗴ecie. I think I'm saying that correctly. It's a uranium lithium player. But look, 12.8%, 10.5%, and 6.2% in 1 week. Basically, the rules for this: I take the Monday open. I have to take it. Doesn't matter what it is. That's the Monday, the starting price, and then the Friday close. So literally, I'm pigeonholing myself into 5 days. By the way, it does mean I tend to have a few more losers out there because of that. Just be aware. But in general, last week, just incredible profits generated from this alone, and it's a $20 service a month. You can find it, obviously, on our homepage. If you go to the very top of our homepage, it's right underneath right there. And again, if I zoom out, it looks more normally here. There we go. So if we just go over here, here's Advanced Trader Insights right up there. And if you click on it, there's your $20 right there. So again, my point is I always try to have something for every price point. I understand there's people all over the world. There's a lot of people that aren't as fortunate as us in America. There's also people in America that aren't as fortunate as others, right? And so you always want to say, listen, I understand you can't get the deluxe, the Ferrari, right? But there's always a good quality product here at verifiedinvesting.com that everyone should be able to afford. All right, let's go into gold here and let's get going here on that. And gold today continues to just float to the upside little by little. I am seeing a wedge pattern developing in gold, so I just want to show you guys that real quick here. Bear with me. It looks like if we take this high and stretch it right through, look at this trend line. All right, so now I say wedge pattern. I'll draw on the secondary wedge in a second. But you take the highest point going back to here, right here, and then it connects right through that high, and we literally tag that high right there at 2,600. Now, keep in mind, my bullish bias for the mid to long term still unbelievably bullish. I've been bullish since $1,900 at the start of this year, saying that this was going to 25 by year end. We've obviously surpassed that target, but really 2,660 is your next target. I still think you're going to get pullbacks, though. So, remember, the weak hands, markets pull back because they like to flush out those weak hands. Institutions often, and I always share my institutional secrets, institutions look at the data and they say, oh, we got too many weak hands, basically retail or even mid-level, lower tier hedge funds in a position here. Let's shake them out. And they will do that, folks. They will absolutely do that. And so you have to know when to look for or where to look for pullbacks when things are getting extended. And I do think gold's getting to that point, at least in the short term, for a shakeout. One of the things to keep in mind, we have an underbelly trend line right here, and I'll show it on the chart in just one second. This would be what we call a wedge pattern, and I just added this lower trend line in. And so that you look for a pullback into 2,500, and then as long as that holds, you're good. If you broke that, then you could go a little bit lower. I still love the long term on gold. Nothing changes on that front. I love gold. What can I say? All right. Next up, let's go to silver here real quick. As we look at silver, guys, silver continues to be decently performing here. Not too shabby. I do have a channel on this, and I'm not loving it. And you might say, well, what do you mean you're not loving it? You're just connecting here, and then it goes to this level. But there's other channels that can develop, and I want to show you one right here. All right, so let's start fresh. Erase all these lines. Get these crappy lines out of here. Let's go to our channel tool on TradingView. Let's connect this high right through here. Now that's what I'm talking about right there. Okay, so what do I mean? Well, if we turn around and we look at the chart, now do you guys see what has emerged? We have this high right here, which exactly, you draw a trend line from this high to exactly that high, and then look at where we are. Boom. So these are the things this is why, technical trading is partially a science. It's also partially an art, meaning that your eye has to be trained to kind of see these things as they develop. Earlier it's like, okay, well, there it is. Now you have this point to look at. And what we have to recognize is as a technical investor, you say, okay, well, you're up significantly into this level. You're coming into a big Fed decision, right? And we have to watch to see, will this Fed decision cause a big drop like this, a retrace, or will it help break out and maybe go to double top at 32.50 or beyond? So watch this level here, guys. This is a big level on the price of silver. Oil today, oil's under a little bit of pressure. A little disappointing for me because I wanted it to keep rallying. Maybe it still will. You guys know I've talked about this every day. There's my line. That's the retrace to the scene of the crime. If price goes there, I would look to short it into that. Lastly, let's talk about natural gas real quick. And let's bring up that chart here. And if we go to natural gas, if I can type it in correctly, there we go. Look at this, guys. So I likely will be taking a short on natural gas today. It's finally up into that level, or kissing. I should say kissing. It's not officially there yet, but man, oh man, are we close. This is that line. All right, midpoint of the M. I've gone over this with you guys. It's even pierced the low end, which is, remember when we kissed it here and pulled back? I don't know if I said that to you or if it was to members of Smart Money stocks and ETFs or the commodity service. But when it pulls back, I always look for the higher level. There it is. We're just about there. So I will most likely be looking to start a short position. I'll update you guys today in trading the close if I take that position today on natural gas. But again, there's your classic M pattern. There's your A. And what usually happens is something like that. Granted, We call it the Widowmaker for a reason in the technical trading world. But nonetheless, we'll watch and see where it goes. All right, guys, as you can see, I'm pumped up. I'm excited. I'm ready to trade the volatility. Let's get this Fed decision out tomorrow at 2 p.m. I'm going to be live right here trading it with you guys. If you want to tune in, I would love that. It'll be right on the homepage of Verified Investing, so come on over. Thank you so much for supporting us here. Thank you guys for understanding the work we're trying to do is important to even that playing field for all of you guys compared to these institutions that always bully all the retail around. They whip us out. They do all these things. There are ways to mitigate those hardships and risks. And Verified Investing is committed to making sure you guys can mitigate those risks as we divulge secrets. All right. Thank you so much. Have a great day. I'm off to trade. Take care.